Hello, everyone. I thought we'd make a start on this slightly ahead of time, just to make sure that everything is working okay. So hopefully, as you're watching this and hearing this, everything's working. You can hear it okay. So if you haven't watched our channel before, I'm David Jones from Capital.com. We do probably about 3 or 4 recorded videos uploaded to YouTube during the week on various markets, gold, S&P, currencies, oil, Bitcoin, all these different things. And we occasionally do these live streams as well. So if you're watching and you haven't subscribed to our channel, you're watching on YouTube now. So if you hit subscribe, you'll get notified every time we upload something new. Just a quick check. I can see a few people are here now. If you can just confirm that you can hear me okay. If someone could just type in that they can hear me, so I know I'm not talking into a void and everything's working okay, that would be great. So let me just flip things along. And I'll keep an eye on the chat. Any questions, please feel free to fire in any questions as we're going through all this stuff today. Let me just do the risk warning first of all. It's important to understand this presentation is for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75% of retail investor accounts lose money when spread betting and or trading CFDs with its provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. I've seen someone's put in a request for the FTSE 100, so we'll have a look at that. We are going to look at a mix of markets today, but we don't normally look at the FTSE, so you're right. We'll make sure we have a look at that. So we've pinned this to the inventories today, the oil inventories that come out in about 13 minutes' time. So I'll talk a bit about those, but we'll also look at wider markets and just go through some trading strategy stuff. So I think it should be sort of 30 to 45 minutes today, and it does. I think you can watch the recording, I think, for a bit afterwards. But let's just talk a little bit about the inventories. Usually released every Wednesday in the afternoon UK time. Here we are. Reserves, and it's basically the stockpile of crude oil is one way of looking at it. So reserves of unrefined petroleum measured in barrels. I think the expectation today is for 4.3 million barrels in inventory. So think about it as crude oil stockpile numbers. In theory, higher than expected inventories can weigh on the oil price because there's more oil in stock. There's maybe a slight oversupply. We had the extreme version of that, of course, in April of this year. Lower than expected inventories could suggest a short supply and push the price of oil higher. So there you go. That's that. So we'll talk about the trading strategies a little later, but let's take a look at the platform. Someone said, yeah, the last video on a crude oil, it did get stopped out. Yeah, I think I was short crude last time round, thinking it was going to run into a bit of problems, and it did push a little bit higher. So this is the price of oil. I think it's been like it feels like an odd time in oil. I think during the summer we had it pushing higher, but really low volatility, and then it really tanked into the 1st of November. Down to $34 a barrel. This is West Texas crude we're looking at. And then it's ran back up just above 43. So it's a massive swing in, 10 days for oil, a $9 swing in the price. It's a 25% move we've seen in oil. But if we take a look at the bigger picture, I would be tempted to go short again up here, because we have seen these old highs for oil from the summer around just ahead of $44 have been a problem. It pushed as high as 43.20 on the 11th of November. Let's flip this over to an hourly chart. But I think it's a difficult market at the moment. I think because if we look at that for oil, that's going back to, when is it? The 8th of September. So 2 months of oil. So broadly, pretty sideways over the last couple of months. We do get the odd extreme move like down here, end of October, beginning of November. But then it pulls back into the range. We've had this move up 11th of November. And I wonder if it's just going to pull back into the range again. Clearly what's going on with the global economy has a massive impact on the price of oil. We've got these vaccines coming out now. It feels like every day someone's got a 94%, 95%, 96% chance with the virus. And it's interesting, the stock market had a fairly muted response today to the latest virus news, no, the vaccine news, no real excitement. So I do wonder if perhaps the better trade for oil, definitely from a risk-reward point of view up here, is to sell short with stops. The tightest I'd bought my stop above that 11th of November high at 43.27, giving it a bit more room, perhaps up above 44 up here. So maybe there'll be a trade to do when the inventories come out. We could have a look at doing one. We'll see how it is. See what's happening. Let's take. Do you really take crude oil inventories only the reason for oil price fluctuation? No, clearly. I mean, the inventories announcement every Wednesday is just a small part of what's going on with oil. The bigger thing that affects oil is obviously what's going on with the global economy. That has a much bigger impact for the price of oil. So let's have a look at some of the other markets before these inventories come out. I think we've got to start with Bitcoin, actually. What a move we have seen in Bitcoin over the last couple of months. It's one of these markets. I'm never really a massive fan of trading Bitcoin. I think I've had a few messages today, actually, just from people who've never traded before asking about Bitcoin. I think it's one of these markets that when it's moving and grabbing headlines, it can suck a lot of people in who've never traded before, and suddenly they want to start trading Bitcoin. We've had this incredible move. We've looked, I think I did a video on Bitcoin maybe last week. I think it's there on the channel somewhere. And I was talking then that maybe, I think it was trading about 14,000 or something like that, that maybe we could even see it get back to the old highs. And as usual, I didn't expect it to be pushing up towards these old highs quite as quickly. It has been an incredible move, Bitcoin. But just the volatility today, if you look at today, 18,500 and as low as 17.2. So what's that? 1,300 point swing in Bitcoin today. $1,300 swing. I think if you're trading a market like this, you need to give it room to move around, and I think that's where people can get either messily stopped out or just hang on to it in a massive decline. But clearly, this trend is up in Bitcoin. If I was looking to trade it now, what would we do now? I think we've got to flip it over to an hourly chart Bitcoin, and I suppose our trend looks something like this. If we got a deeper sell-off back to only where we were at the beginning of the week, back around 16,000, I think it could be interesting. You can see it's taking a bit of a hit at the moment. I think it'd be interesting if we do pull back into sort of 15.8 to 16.5, that sort of area, see what happens. I think you just need to be aware of, to me, Bitcoin is just like any other market. I don't have the almost cult-like approach that some people have to cryptocurrencies. I think it's like any other market. It's pushing back up to where it peaked, in the mania from nearly 3 years ago. And I do think you have to be aware that I'm sure there are plenty of people who are still holding Bitcoin from the old days, from the run up towards 20,000, and with it pushing up so close recently or today, are there going to be a lot of old holders up here who are only too happy to sell out their Bitcoin? So I think we could see a bit more choppy trading in Bitcoin up here. But it's going to be really interesting to see how it pans out. But you can't argue with the trend. All the stuff I do on the channel is all trend following. So you cannot argue with the trend in Bitcoin, but as volatile as it ever was. So let's get back and look at some more normal markets. Let's have a look. And I can see a few requests for markets coming through. So I will look at those perhaps after 3:30 when the inventories come out. We'll have a look at some of these markets, and then we'll go on to our sort of quick trading session thing that we're doing, or training session. So here's the S&P 500. I think it's interesting what's happening this week, the broader US stock market. If we take it back to, where am I trying to get back to? Was it last week? Was that that was last week. That spike up at the beginning of last week on the first bit of vaccine news that we had, that news from Pfizer, that spike up. And since then, it's been flat. So we've had a fairly flat week for the S&P. We've had that news out today, this morning, about the vaccine again, and fairly muted reaction by stock markets. Again, you can't really argue with the trends in stock markets. If you look at the Dow, the Nasdaq, the S&P, we're bumping up pretty much at all-time highs on these markets. So the trend is strong. I just wonder, in the short to medium term, is it maybe somewhat overextended up here? So it wouldn't be surprising to see stock markets under a bit of pressure from these levels, but still, because that trend is up, still looking to be a buyer on the dips. You can see, if you like oscillators, we are, if we look at the RSI down here, we're bumbling around overbought on the RSI, so let's not be too surprised if we see, a little bit of a correction up here. At the moment, it's trading pretty much where it closed yesterday, the S&P, but it could be interesting up at these levels. And then if we have a look at gold, I mean, gold has been, I think it's lots of markets have felt quite boring in the last few months. I don't know how it's felt for you, but we have had something of a sideways trading for markets. And here's gold. I know gold is always a popular one, and we do the gold videos that we do on the channel always get a lot of views. They always seem to be quite popular. So let's take a look at gold. We on the longer term stuff, we always start off looking at this trend for gold that started back in August 2018. So we're 2 years into that, and you can see since the March lows around 1,1500 an ounce, the price has accelerated away. We had all-time highs, of course, up here in the summer, $2,075 an ounce. And since then, it's just been drifting. It feels as if it tries to get a move on, and then it just falls. I think it's an interesting couple of days for gold. We've got these lows left from September at 1848, 1850. It's currently trading at 1880. So I think if you wanted to be a buyer of gold, the risk reward down here looks pretty interesting. If we're buying here with stops the other side of 1840, we've got $40 risk. And if it is going to push back up to the old highs, we've got a couple of $100 upside. But I think with clearly with this vaccine news coming out, people are being a bit maybe embracing risk again. So we see, I think that the defensive side of gold isn't as attractive at the moment. But I do think down here, if we flip this over to a shorter term chart, you can see just over the last week or so, we have always seen buyers come in this 1850 to 1870 area, and we're seeing a bit of strength at the moment. So I think it is an interesting one, but I think we're going to have to be patient until we see it hitting its fresh all-time highs again. The same story with silver. Someone was asking about silver. We did put a silver video out the other day, actually, on Monday. I think the silver video went out with admittedly a bit of a clickbaity title, just to try and get people excited about whether there was a crash coming on silver. And I don't think there is, but there's not much excitement either. I think in the short term, pretty much like gold, all that that great run up here into the summer, 7-year highs in August for silver, and it's been just drifting since then. I do think if you look at silver, I think the trend is still up. I think on the video I did earlier this week, it was looking at it's probably that trend there, and okay. It's right on the trend line now, silver, the shorter term trend line off the 29th of October low. So we're only 2 weeks into it. But I think on the video I put an order in, you can see it here, an order to buy at $24, and it hasn't quite been filled yet, the silver price, that order there. But I think again, there's a lot of support, short-term support running from 22.50 through to 23.50. So I still think in the short term it could squeeze higher. But a lot of that momentum, I think, has gone from that market. How are we doing for time? We've got a couple of minutes until the inventories come out. So they have gone a little bit boring, I think, the likes of gold and silver. And we still have, just a quick one before we look at oil again, we still have a really non-committal US dollar. I'm going to take a look at the pound and the euro in a second, or after the inventories come out. But this is the dollar index, so the dollar against a basket of currencies. And I think we're not really getting much direction from the dollar at the moment. And we're seeing that play out in gold and silver. It's going to be really interesting down here. The dollar fell from 104 in March down to 92 in September. and it's just been sideways since then. So I think it really is bounce or bust time for the US dollar from here. So things could get a bit more interesting, I think, as we get towards the end of the year. But really seeing what happens down here with the dollar. So this whole sort of 92 area is pretty critical. Let's take a look at crude oil. Let's see what's going on. I'm trying to keep an eye on the news just to see what the news says. So we're expecting about 4.3 million. Let's see how it comes in. Where does it? I think it's just come in. So it's come in. I think I've got the wrong number there. Actually, hang on a second. It's come in at 768,000. Let's see what effect that's having on the price of oil. So we are seeing the price of oil coming off a little bit, and I do wonder if the better trade up here, is to sell oil. Going back to what I was saying right at the beginning, because we've bumped back up to the top of the range, and we don't really have a good medium-term trend in oil at the moment. So I do wonder if the better trade is to be a seller with stops above 11th of November highs, or even going back to the summer highs up here. So I would be expecting, medium term at least, the price of oil to come under a bit of pressure up here. But we'll see how it works out. We'll jump back onto it. I'll finish going through some of these other markets, and we'll look at some of the requests that have come in. I think pound against the dollar has been interesting. This is the daily chart, pound against dollar. I think I've got a couple of trades. We do in the videos we do a few trades. And I think I've got a few trades. There we go, pound against the dollar running September, October and November, up about £600 on those trades so far. So I have been bullish on pound against the dollar. And we do, clearly we've got this recovery that's been going on since the September lows for the pound. And I think that's still going. At the time of doing this, it's just about challenging those highs from the other week, 33.13 on the pound. So for me, pound against the dollar, I'd still be looking for a run back up to the early September highs, just shy of 35. So 135. So I'd quite happy, I think at the moment at least, to be a buyer on dips, pound against dollar. Nice little trend over the last few days on that one. So we'll see. We'll see how that one turns out. But for me at the moment, that trend is still up. The euro, I think, is a bit of a different story with the euro against the dollar. If we look at the last few months, euro dollar, you can see pretty sideways. I think I've got some trades running on that actually. I think there are some really old trades in here, euro dollar, just down here. There's one in there from the 27th of May, so it's up about 14.70 on the euro, but it's been pretty sideways for a long time. So I think still bullish, but really needs to break through these old highs up at around about 120 to try and make things a bit more interesting. And just one last market before I have a look at some of the other markets that are coming in. Copper. I think we did look at this last time around. Copper is quite an interesting one from a global economic recovery point of view. It can often be used as something of a proxy for the health of the global economy. And we do have the trend still chugging higher off those March lows for the price of copper. It made a new high for that trend a couple of days ago. So I think if there's a market you don't normally watch, I think copper is an interesting one. I think I do have a trade on copper at the moment, long copper. So we'll see how that one turns out. So what I'll do now, I'll just have a quick look at some of the markets that people have asked for. Then we'll do a little bit on trading strategy. So FTSE 100 was one. FTSE 100 has really come back to life this month. We'd had that real disappointing performance by the FTSE since June. If you think US markets were pushing out to highs, and the FTSE was just drifting. Look at that. The FTSE beginning in November had hit its worst levels since April. So we were back to almost the lows in the big sell-off. But clearly perked things up this month. We've gone from 5,500 to 6,400. That's a heck of a move. It's not far off a 20% move in the FTSE, is it, this month? I must admit, I would still be quite tempted to think about going short up here, particularly if we think that US markets are going to get a bit overextended. They are a bit overextended at the moment. Perhaps an interesting trade would be to sell short the FTSE. I think the closest I'd want my stop is the high from a couple of days ago at 64.65 or even a better place is this June high up at 65.30, that sort of area. I mean, that is a massive old move in the FTSE. It'd be interesting to see what happens, I think, up here. If you're a fan of RSIs and stuff, it's looking pretty overbought up here. So whilst the broader trend for stock markets is still up, particularly in the US, I do wonder if we could see them under a bit of pressure in the short term up here, stock markets, and clearly that would translate to the FTSE as well. But a great move, a fantastic, incredible move, to be honest. I definitely didn't see that coming this month. So, but perhaps to be a little bit cautious up at these levels. Let's see, what else have we got? So we had gold. We've looked at gold. Turkish lira, someone was asking about. We've looked at that before. Dollar, here we go. Let's do the dollar against the Turkish lira. Here we go. That's quite interesting, isn't it? This is a daily chart. It's interesting that it's come off really hard. So what we're seeing here is dollar weakness against the lira. If I was going to trade dollar Turkish lira, I would be tempted to be a buyer. I would see, so a buyer of the dollar and a seller of the Turkish lira. I would see this weakness over the last week or so as perhaps a buying opportunity. Where would your stops go? Most aggressive place for a stop, underneath the lows, around 7.5, maybe a bit further out beneath these lows. But that's a really interesting market. But I would take this sell-off. I don't know what's caused it. Is it the US election? It's not the election, is it, that's caused it? I don't know what's caused that. But I would take this weakness in the dollar as a buying opportunity for now. That'd be an interesting market to come back to. But I think if we start to lose 7.4, then it looks like that dollar strength is over against the lira. But I'd be tempted to see it as a buying opportunity at the moment. So it's a really interesting one that to come back to. Dollar Turkish lira. Can we have a look at BA stocks? That Boeing, wasn't there was news today, wasn't there? It's flying again, isn't it? The plane they had the major problems with, clearly two major accidents with the Max, wasn't it? The Max plane. Let's have a look at this is Boeing's price. So Boeing's price had been in decline anyway since early 2019 from $450 a share. Fell off here. This is clearly the broader market weakness is pushing it down here. February, March, and of course, the double whammy effectively of no plane travel, regardless of their previous problems. It's spiked up today. Not surprising. We've seen it perhaps spike up on that news, but it had already rallied from $140 at the end of October, and it's touched $225 today. That's a big move for a big company. I would be tempted to go short up here. There's the famous saying, isn't there, about markets? Buy the rumor, sell the news. The news is out today that the planes are going to be flying again. So I think an aggressive trade on Boeing, could be to go short up here. That we've run up in anticipation of this news, and we're going to come back off again. We're going to have some of the heat taken out of the share price. It's an interesting one to watch though. So currently $212, 40 or 50 a share, something like that. So let's have a quick look at that move today. So where's the move today? So it looks like gapped up in out of hours trading, has pushed higher, and then as the market has actually opened properly today, has sold off. So perhaps we'll see Boeing under a bit more pressure from here. I think it'd be interesting to come back to in a couple of days' time when perhaps today's news has settled down a bit to see what the market really thinks. Okay, we did Bitcoin. Natural gas. I think have I still got a natural gas trade on here, or has it been stopped out? I think it might have been stopped out, the natural gas trades. Oh no, it's still there. It's underwater. So I bought at 316 natural gas, and it's currently about halfway away from my stop at the moment. It's a strange one, natural gas, isn't it? It's not a market that I've traded much until the last year or so. So there's the trade. I bought in up here. So it had a bit of upside when I bought in, but it's flipped down the other way. It's a market that really moves around. And if you think a market like oil is volatile, natural gas is a whole other level again. So from July of this year, has gone from 168, traded as high as 340, end of October. So doubled, isn't it? That is a doubling, isn't it? So doubled in price. I'm still in the trade. I I think for me, if I didn't have a trade on at the moment, I probably wouldn't put a trade on. But for me, I suppose I could be tempted to be a buyer down here. It has fallen out of that trend, and it has pushed a bit lower the last couple of days. I suppose an aggressive trade is to be a buyer with a stop under the October low at 260. So it really needs to start getting a move on from here, natural gas. So I'm still long on this account, on the natural gas trade at the moment, and I'm happy to stick with it. But it needs to really start recovering from here. I think if we start breaking lower, then the risk is we're going to pull back into this range back from August, natural gas. So it has fallen out of the trend line, but maybe we'll see it have another go at a recovery from here. Somebody's saying that silver is flying on the 5-minute chart. Oh, there we go. We did have a look at it, didn't we, on the hourly? Oh, there we go. That is having a move, isn't it? So gone from $24.30 from about 3:05 today, so about 35 minutes ago, and touched 24.70. It's really volatile, but for me, I've got my order in at 24. I'm happy to wait and see if it gets filled, that order. Can we have a look at Amazon and Tesla? Yeah, we can have a look at that. Amazon. Amazon clearly had a major benefit from the lockdown, with around the world with all the shops being shut. Pretty quiet though, isn't it? Pretty dead. Early September is where we saw all-time highs for Amazon, $3,500 a share, and pretty flat since then. I suppose if you had to do anything, I'd be a buyer because the trend is up. Decent support from 2,800 through to 3,000. You can see just looking at the RSI down here how flat things have been. So that's it, isn't it? It's just a bit dull, I think, at the moment. And Tesla, I think, was another one. I think Tesla's the same. Tesla has been clearly that they've popped on that news that they're going in the S&P, aren't they? So we do have a Tesla trade on at the moment from a while back, I think. I think there is a Tesla trade in here. Here it is. So bought at $400 a share. They're currently $455. It's a bit like Amazon. It's just stuck in the middle, isn't it? And I think, I wouldn't say necessarily buy just because it's going in the S&P, because that's not really a secret now, is it? Everybody knows they're going in the S&P. I suppose if you wanted to do a short-term trade on Tesla, if we flip this over to the hourly chart, lots of support this month from 380 through to 400. There's the move. You can see the move there on the S&P inclusion, but not too exciting at the moment, I'd say, Tesla, although that trend off those lows is still up. What else have we got? Coffee. I've got a trade on coffee somewhere else, actually. Coffee is an interesting market, coffee. I think, did we look at this last time around? The time to buy was actually, I think, the end of October, which doesn't really help us now, and that is really moving today. So I've been in this trade for a while, but if we pick up on it, we do have a very gradual trend for coffee over the years. But what's been interesting is in sort of 95 to 1 on coffee, we've seen big support. It's come back to it again in November. If I was a buyer now, I don't know where my stop would go. It still needs to be the other side of there, which is quite a wide stop. But personally, I'm targeting a run back up to those early September highs in copper. So let's see what happens. What else have we got? Let's see, VIX. Okay, I tell you what we'll do. Let's do. Someone's asked the DAX. Have a quick look at the DAX. Then we'll get into talking a bit about trading strategy. DAX 30. The DAX. So I think it was a good opportunity this morning on the DAX. If we flip this over to an hourly chart, I'm a big fan of looking at like shorter term levels. And where was it? November. So this morning, it sort of came down to about 13,070, and it was the low yesterday afternoon. So that was a bit of support for the DAX, but it's a bit sideways. I do think the US markets are the ones to watch here, and we've not seen much for US markets for a week for stock markets. So I do wonder if we'll see some of these other markets come under some pressure here. There's the DAX on the daily, a bit like the FTSE, massively underperforming, and then takes off like a rocket during November, but we've pulled back into the zone where we were all the way since July. So again, if you wanted to go short these markets, good levels up here. But I think we could have a really interesting end to the year for stock markets. Let's see what it looks like. Right, let's do a bit on trading strategy, and then we might come back and look at markets. Why do most traders lose? If you remember, there was the risk warning right at the beginning, if I can find it. Every broker has to list a risk warning of what percentage of its clients make money. And you can see ours there is 75% of retail investor accounts lose money. So it's typically 70 to 80%. It looks something like that. So this is really important when it comes to why most traders lose. So most traders lose. This is a great chart. If there's only one chart you remember from today, remember this one. There was some work done by a US FX broker where it looked at 15 of its most traded currency pairs from March 2014 to the end of March 2015. So 13 months worth of data. And it broke down on the various markets, Aussie dollar, US dollar, pound against the dollar, all these different markets, the average gain when people were right versus the average loss when people were wrong. And you can see, take a market like pound against the dollar here. If you look at this market here, the average winner, the average winning trade made about 40 pips, this blue line here. The average losing trade lost about 80 points. And this is the reality of trading for a lot of people. Their average loser is about twice the size of their average winner. So if when they're right, they make £100, $100, whatever, they lose $100, they lose $200, £200 when they're wrong. And there's no way you can make money with that sort of approach. You need to think about, well, how can I try and tilt the odds in my favor? But this is why most people lose. They take their profits too quickly, and then they sit on their losers too long. And you just, even if you're right, 60% of the time, it's not a profitable strategy. So we need to think about changing that and turning it on its head. And also, I think traders have too much information. Plenty of traders, will have a price chart. Let's flip back to oil. Where's our oil chart? Here we go. Here's the crude oil chart. I should have gone short crude oil. They'll have so much information on their charts. Let's just put a lot of information on this. Here we go. Ichimoku clouds, Bollinger Bands, MACD. They'll have so much information that they're not looking at what the price is doing. So they're ignoring important things like trends, support and resistance, that sort of stuff. So I think too many traders have far too much information on their charts. They think there's a holy grail if they just put loads of stuff on the chart. So I'd say very much, if you watch the videos that we do during the week, and again, if you're not subscribed, if you could click on subscribe on YouTube, you'll see that we look at the trends, look at support and resistance, and we'll have a look at things like RSIs. But you don't want to have so much information on your chart, you can't actually see what the price is doing. So I'd say always start with a clean chart. So let's just take some of this stuff off. Here we go. There we go. Let's go back to the nice basics. So oil is coming off a bit now after that, those inventories. So keep things simple. I think when it comes to trading, we want to try and keep things simple. So we want to trade with the trend. So if we go to a market, pound against the dollar is a great example at the moment. Let's just hide those trades for now. Pound against dollar is a great example. So I did end up buying, I think back in, you can see the trades here. I do the trades when we do the videos. So bought in September, October, and November, pound against the dollar. So buying, at various points into the trend. So here, and here. Start off looking at what is the trend and trade with that trend. And then when you're trading with the trend, if we flip this over to an hourly chart, a shorter term chart, I think I did a webinar, it was about a week ago, and I think the latest trade, was it the 12th of November? 12th of November, 6:45 in the evening, my time. And it was actually here was the latest trade for the pound. And I was doing a similar sort of talk as I'm doing now, but I was buying because it had dropped from 133 down to 131. It dropped a couple of hundred points, but it was holding above these old lows. So for me, that was a really logical point to have my stop loss. Yeah. So if I'm buying here with a stop loss here, I may be only risking 50 points if I'm wrong. But if I'm right and it goes back, like it has gone back, there's 200 points of profit on the upside. So that was quite a fluke how that's turned out. That was quite lucky. how that turned out. But think about trading with the trend and having your stop in a logical area where if it breaks, okay, things have changed. I think too many people will trade either without stop losses or they'll just buy and put a random stop loss somewhere 20, 30 points away. You want to try and be trading in areas that make a lot of sense, like back here, November, where it pulled back and bounced, and we had good support from November the 2nd. So think about setting it in logical areas when it comes to trading. And which brings us on to this balance between risk and reward. Let's go back to that pound chart. It's a great example. Let's not forget, most people lose because their winners are half the size of their losers. So here, if we were buying like back here on the pound, I think my initial stop was 50 points away. So I was risking 50 points. But my upside, if I was going to go back to here, was 200 points. So the risk reward on that trade was 4-1. And it has played out like that. It is a bit fortunate that it's played out like that. But the risk reward on that trade was 4-1. So when you're putting a trade on, think, well, if I'm risking that much, is there really a lot more than that potential in the trade? And the next thing to do is just to do the trade. Just to don't sit there and think about it and think about, well, shall I or shan't I? I think you have to do the trade. So let's say oil. I've talked about going short oil. Let's think about doing a trade on oil. So the highs in oil, November the 11th highs, were 43.27. So let's say we're going to go short oil. I'm going to put a stop loss at 50 cents above that, 43.75 is my stop on oil. If I could type, 43.75. I'm going short at 41.90. So my stop is $2 away. Is there $2 or more in this trade? Well, I think there might be. If it slips back to sort of 37, that's a $4 profit potential on this trade. So for me, that trade makes sense to do. So I'm going to go short. We will go short oil up here. And then think about the risk. If I'm selling here, if I sell 1 barrel, my risk is about £1.30. Let's say I'm happy to risk, I don't know, £50 on this trade. We normally risk $2.50 on the trades we do, the other trades we do. But as this is a bit of a short-term trade, just because we're doing it now, we're going to go short 38 barrels at 41.94. I've got a really logical place for my stop above the highs from about a week ago. My risk is £50. I'm risking $2, and I think there could be at least $4 in the trade. Let's do it. So sell. There we go. So I sold 38 crude at 41.95, but weigh up the risk reward for the trade and then execute it. I think don't be, one of these people who sits on a demo account forever. I think demo accounts are useful for when it comes to helping you work out how the software works and everything. But I think it's only when you actually start trading that you get a feel for what works and what doesn't. And I think one of the benefits of trading with us at Capital.com, you can trade really small. So if you only wanted to trade $1 of crude and just risk losing a few pence, for example, you can do that. So you don't need to trade ridiculously big. So I would say, once you're happy with the strategy and the markets you're going to follow, start trading, but trade small. Don't risk, next month's mortgage payment or whatever on whether or not the price of oil goes up or down. Okay, so you need to actually execute the trade. And there's no holy grail. Despite, it's quite interesting. I look at some of the comments on our YouTube videos. I don't think there are any up at the moment, but people, basically scammers, trying to sell stuff. Trying to sell magic trading systems. You don't see it so much. If you take a look at one of the videos, the silver video from yesterday, we do go through and delete them. But you often see people saying, WhatsApp me on this number, this, that, and the other, because I've got a magic trading system. There is no magic trading system, but if you have a strategy, like on that pound against the US dollar trade that we've done, where my risk is only 50, but the trade is up so far 165, so I've made 3 times my risk. You don't even need to be right half the time. I think that's the other thing with trading. If you've never traded before, you'll be surprised how often you're wrong. So bank on being right less than half the time. You might be pleasantly surprised, but have the risk versus reward. Think about that balance between risk versus reward. There is no magic system. but there doesn't need to be a magic system. So I'm going to start wrapping things up there, but I will, if you've got any more questions, I will jump back into the questions. But for you, those of you in the UK and Ireland, we have launched spread betting. So if you go to Capital.com, you can trade using spread betting, and of course it's tax-free. Tax gains with spread betting are tax-free. If you're UK and Ireland, you can go to Capital.com, open an account, open a demo account, download the app, play around with it. So open an account and take a look at that sort of stuff. If you've got any questions after this, I'm more than happy to answer emails. I mean, clearly, I can't give financial advice. I don't have a crystal ball. But any questions, feel free to drop me an email, david.jones@capital.com. Follow me on Twitter. I'm at Jones the Markets on Twitter. And go to Capital.com to find out more about the company and all of that. Oh, someone's asked for Platinum. Let's have a look at Platinum in a minute. Good one. So go to Capital.com to find out more about the company. Open an account, download our app, all that sort of stuff. Obviously, subscribe to our YouTube channel. So I do our YouTube channel, and we do normally 3 or 4 videos a week. The occasional live stream. So the next live stream we do will be probably the non-farm payrolls. I think will be the next one. So that will be the first Friday in December. Let's have a look at some of these other ones in here. Yeah, Bollinger Bands. I quite like Bollinger Bands now and again, but RSI and price, I think, are pretty good places to start with. Platinum. It's an interesting one, Platinum. I've got a trade on Platinum as well somewhere else. But talking, on this, when we're talking about trends, Platinum and Palladium last year were really interesting markets because we did have good trends. This was last year. Clearly, we have basically the crash with everything in March for Platinum. And we must have been looking at this recently because it's really interesting, this one, because I would pick up on the trend, perhaps looking something like that, after the initial blip lower. And then we've sort of stabilized into this trend in Platinum. And I think for those of you who are fans of patterns, we did have something of a triangle pattern going on with Platinum, didn't we? And it's broken out. It's broken out. So I'm long at the moment, Platinum. If I didn't have a trade on now, I might be tempted to wait for a pullback. Do we get a pullback back to 880, something like that on Platinum? But in the sort of medium term, I'll be looking for a run back up to perhaps above 1,000 and maybe even more. On Platinum, but it's a really interesting market, that one. And for now, at the moment, I'm definitely still bullish on it. If it broke below these lows from September, I'd change my mind. But yeah, it's an interesting market to watch. Perhaps we'll have to do a video on Platinum because it's got a bit more lively again. So we'll see how it turns out. Right, we'll wrap things up there, everybody. So we're finishing. So we're about 45 minutes. So I hope you enjoyed it. We do educational videos and market videos on the YouTube channel. It's all free, of course. We did look at copper, actually. Go back and have a look at copper. We'll do another live stream in a couple of weeks' time. So we'll wrap things up there. Thanks for coming along. Please hit the like button because that's important, isn't it, for the older YouTube algorithm. And as I say, any questions, drop me an email.